Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll get better with saving, spending and investing. And today, we're digging a little bit more into the subject of China. Should you invest in it? So the rise of China isn't exactly a new story. It's already been the world's second largest economy for about 9 years now. So in full disclosure, my portfolio currently has some exposure to China, but I'm considering adding some more. So despite some of my investing heroes that are pro-China, I really wanted to answer the question for myself and hopefully in the process, maybe even help some of you guys figure out that same question as well. Should you maybe add money into China or maybe start the process? So in part 1 of this series, I'll be covering some of the negatives right up front and then go on to some of the long-term considerations that I really feel optimistic about before talking about a little bit more on the short-term triggers which I think are quite interesting. So if you're ready, let's go! So here are the risks that make me a little bit uncomfortable with China. The biggest elephant in the room right now is the tensions between US and China and the entire COVID situation. The trade tariffs that have been slapped on China, and on top of that with the entire COVID situation that has shown weakness in the global manufacturing chains, have caused many companies to re-evaluate whether they should retain manufacturing in China itself. In a recent survey, 33% of companies that were asked have expressed serious interest or intent of moving their manufacturing out of China. And to top it off, the current US government has been pretty hostile towards Chinese companies that are listed in the US. So they're actively discouraging some of their institutions to not hold Chinese stocks, and they have initiated certain policies that might force some of these companies to delist from US-based stock markets. The only silver lining seems to be that it is more about uncertainty as well as inconvenience rather than damage to the actual stock's value. So in the event that a company is delisted from a US stock market, most likely they would just relist in some of the exchanges in China itself. The next issue is a long-running one, and it's to do with the integrity of China when it comes to data, financial reporting and auditing. So never mind the stocks that are actually listed in China themselves, but for those that are listed in the US, did you know that they are not subject to US-based regulators and their financial reporting? And the general excuse provided by Beijing is that, oh, they might have some state secrets there, so you can't look in our books. So this increases the risk of fraud. And with the recent case of Luckin Coffee, it's evident that it's not a subject that is old news. It is something that's an ongoing risk which we have to take as investors. The last risk is really to do with the stock market itself. Now, historically, China has been a really volatile market. Now, if you look at the charts, you can see that the swings can be really dramatic, and one of the main reasons of why it's so volatile is due to what type of people are trading in those markets. In the mature stock markets like the US, about 80% of the volume of trading is done by what you call institutional investors, which are basically the pros. The rest, about 10 to 20%, are done by us, the individual investor. In China, it's the exact opposite. About 80% of the trades are done by individual investors. And the thing is, individual investors tend to act on emotion, and that's what causes such radical price swings. And this was especially true in the 2015 crash. Individual investors are also critical in pleasing the gods of YouTube by clicking on that like and subscribe button. Truthfully, if you look deep enough, you'll find certain other issues as well. For example, like long-term demographic issues with the aging population. You have the tensions that exist in the South China Seas, then you have the human rights issues that are rising, so there are plenty of many other elements to worry about. But nevertheless, those are my top concerns when it comes to investing in the country between the next 5 to 15 years. So let's get into the reasons why I still feel optimistic about China and potentially even want to increase my exposure to it. The first thing is China's growth story, which really can't be ignored. If you look at the GDP growth rate in 2019, China recorded a 6.1% growth. If you compare that to the US, where I hold the bulk of my investments, the growth rate was only 2.3. This outperformance in GDP growth has been ongoing for a long time, so much so that projections have shown that by 2030, the size of the Chinese economy will finally eclipse that of the US economy. Next are the improvements that the Chinese authorities have been making towards its own stock market. I won't get into too much detail, but the simplified story is that until today, there are a lot of restrictions for foreign investors who want to invest in China. The markets there are simply not as open as that of the US. There are many different classifications of shares that determine whether or not you are able to invest in it as a foreigner. However, initiatives like Stock Connect, which was introduced back in 2014, have gradually been increasing the ease of foreign investors being able to invest in Chinese companies. You can think of Stock Connect as an approved list of stocks that foreigners can buy. There's a range of other improvements being made, including the most recent reforms in August of 2020 to the Chinex platform. And they're all part of the public stance that China has when it comes to improving the quality as well as the health of its overall stock markets. And I should have mentioned it before, there are 3 stock markets in China. There's one based in Shanghai, one based in Shenzhen, and the other one is based in Hong Kong. All these improvements have been rewarded by the world through a show of confidence, most notably in the MSCI's inclusion of more Chinese stocks into certain indices that it has. This just simply gives us greater access as well as a show of confidence in Chinese stocks. The last really interesting factor for me as an investor is the relative underinvestment of the world when it comes to holding Chinese stocks. Currently, only 3% of China's A shares are being held by foreign investors. So collectively, it's really about the macro growth story about China, the improvements that are being made towards its stock market, and the overall growth potential in the long term for individual investors to kind of get in a little bit earlier. In addition, there's some interesting short-term triggers which I feel encouraged by. The first is more personal when it comes to my portfolio structure. The bulk of it is currently exposed to US stocks, and with the recent COVID situation, looking at how they're handling it or really not handling it, and on top of that, the vast printing of US dollars makes me feel that yes, I should try and think about diversifying my portfolio a little bit more. Speaking of COVID, China looks like they've handled things better on ground, and they're one of the few countries that are projected to still post some level of growth in 2020. And this puts them in a great position to lead the recovery of global growth. And just out of curiosity, I wanted to see if those numbers were legit. And according to a source, they did mention that if you check the MNCs or multinational companies reportings, it looks as if that yes, it supports the growth numbers that are being shown by the government itself. And you kind of see this reflected in the confidence of foreign investors picking up a lot of Chinese stocks throughout this entire period. And on top of that, the market cap of Chinese stock markets have finally regained the ground that they've lost since 2015. And finally, while I don't actively trade these days, I still pay some attention towards stock chart patterns as well as trend lines. The price action of the major stock market indices in China show that there might be some long-term trends brewing. So those are the thoughts that I have on China and why it makes sense to me as an investor. And like all investing, it's not a clear-cut story. What about you guys? Let me know in the comments below, what are your thoughts about investing in China? So thanks for watching, and if you found this useful, I would really appreciate it if you hit that like, subscribe, as well as that bell button, because I'm going to be back again next Sunday with part 2 of this series on how to invest in China should you be interested. And until then, take care and keep playing your own game.